Welcome back to another edition of Forex Tech Magazine. This is your host, Lewis, and right now it is 12/26, 2018. Wow, a couple more days and we're going to be out of here, folks. And along with 2018, it's going to be 2019, God willing. So, before we get into any type of discussion, I want to throw a disclaimer out there real quick. Disclaimer goes a little something like this. Any and all information given to you by Forex Tech Magazine should be considered to be for informational and educational purposes only. Nothing that we give to you or share with you should be considered to be investment advice. If you're seeking investment advice, then our suggestion would be to seek out the assistance of a licensed, competent advisor. So let's get into what you came here for, which is to look at some trades. Now, we're not trading this, so let's not worry about that. Let's do a recap, first of all, of what happened on Monday, Christmas Eve. Also, by the way, happy holidays. Hope you guys had a good time over the holiday period. We were still trading Monday. We actually came in early Monday morning, and we talked about some trades that we had on the books. Let's look at it, see where we're at with that. Boom. We had 2 of the 3 trades that we had on cash out. The Great Britain Pound US Dollar, that one hit for 75.9, almost 76 pips. So we made $752.50 off of that one. The Great Britain Pound Canadian Dollar, that one hit. So we made 178 pips off of that one. So that one went for 13.09. So that was pretty good. And then these right here are just some. Actually, I'm sorry. Hold on a second. Go back. Oh, yeah. I'm sorry. Yeah. This is when it closed, 24th. So right there on Christmas Eve, picked up another additional $2,000 right there before the holiday, right there before the big holiday. And then, of course, prior to that, we had the on the 21st, the Great Britain Pound Aussie Dollar. So they just left us with one position that was open, which is the one that we're in right now, which is the Great Britain Pound Zillion Dollar. And currently we're positive on this one. We're at 132 pips at the moment, and we're pushing our way up. I think this one right here is supposed to be like 300 pips altogether, so we still got a ways to go before this one right here finalizes, but we're on it. So here's the chart for this particular pair. All right, and as you can see, we have the Fibonacci sequence in place. This is our A, this is our B. Here's our C. Price bounced off of the C and is now in the process of, I don't know why I got this trend on here, but so right now it's in the process of pushing its way up, right? I think I was actually trading off the 1 minute, not 1 minute, 1 hour chart on this one. Let's see. Yeah, I think I was, no? Well, anyway, yeah, so price is, come back. A little easier to look at. Yeah, okay. So anyway, price is pushing its way up, and right now we're doing a little bit of a pullback. It's making higher highs, higher lows, right? So this right here is a low. There's a higher high. This low is higher than that previous low, and this high, of course, is higher than this previous high. So that lets us know that the trend is still in place, and that it's on its way up. We could also put in a trend line here. I don't know what this. I'm not sure what I was doing with this one, but we also put in a trend line. It's kind of a wide trend line, but it lets us know that the trend's in place and that price is pushing up. And I know I talked about this earlier, about a day or two ago, about using the trend line as a canary in the coal mine type deal. And you can, but also kind of keep in mind too, your price action, what your price action is doing. So yeah, I do like to keep my trend line in place because I like to see how price is reacting to the trend line. But there have been instances where price has closed below the trend line and I still kept the trade open just because looking at the trade overall, the low wasn't lower than some of the previous lows. It was right there at it, so it kind of led me to believe that they were still buying in that particular pair, and there wasn't any need or any urgency to close that pair out at that instance. So remember, trading is part art, part science. And so a lot of this, you're going to have to just kind of like look at it and based off your own interpretation, decide what you should be doing, whether or not you should be pulling the trigger on closing out a trade or going in and buying a trade, right? Oops, that's not it. This right here is a Great Britain pound US dollar. This is one that we closed out, I think it was on Monday. And as you can see, you know, this one right here was a really difficult one to trade. For whatever reason, it just kind of hung out there. And it seemed like it did not want to go ahead and just close out like it should and ought to. Thank God it finally did. Israel was one of the ones that was difficult. It just traded sideways for such a long period of time. And initially, when we first came into this trade, we came in up here, and it was actually the C was actually in the red, and so you know we had our take profit up here, but then after a series of really bad moves, the C came down into the green, right? And so then we put our take profit right here, right? And as you can see, you know, it just kind of drawed out, up, down, up, down, up, down, up, down, until finally Monday it pushed through, thank God, and boom, we was able to hit our take profit. So this one here was a pretty drawn out, you know, less than a willing participant trade, but we hit our target, which is really good. I'm really proud of that. Let's look at the one for Great Britain pound, Canadian dollar. This right here is a little different. This right here was pretty aggressive, and what I'm finding is, and of course, you know, you can read studies about this too as well. The more of a shallow pullback, the higher propensity it is for this thing to hit its target pretty aggressively, you know, very fast. Because we had a deeper pullback over here, it was less energy going into the market, so it took a little bit of a longer time to hit its target. Whereas here, you know, the pullback was a little bit shallower, and so instead of doing that whole zigzag, and really it's kind of almost the same time, but instead of zigzag, you know, I'm there, I'm not there, I'm not there. This is kind of more of a better trend, just push up to hit the target. So at any rate, and if you notice, they had a shallow pullback. I mean, it came back to the 0.382, which is pretty cool, right? What's the other one? Yeah, this is our target here, and as you can see, we hit our target on Monday. Price went up, price come back down, so that's where we are right now. And it may continue to go up. Excuse me. It may continue to go up. Don't know as of yet, but for right now, we're kind of cooled off on this pair. We're just gonna see what it's gonna do. I will tell you this: after this next one hits, I'm gonna sit flat for the rest of 2018. I know that really doesn't. It sounds a lot alike. I mean, it sounds like a lot on face value, but considering the fact that Monday is the last day of the year, it's not that big of a deal. Just don't plan on getting anything between now and then. We'll like to go ahead and cash out on this one before the year is out and just be done with it. Let's see here. CAD. Aussie dollar. I think we talked about this one here already. This is the Aussie one. This is the Great Britain pound Aussie dollar. Same thing here, shallow pullback. Shallow pullbacks make for really great aggressive moves up, right? Boom, ready to cash out. Once it cashed out, price pulled back for a little bit, and then proceeded to go back up again. If you wanted to, you could have came back in and said, hey, you know what? This right now becomes my B. This right here becomes my A. Right. Oops. Price pull back into, very shallow. So that means that we're going up to here. All right. And so there's still opportunity to get into this particular trade if you wanted to. I don't want to. I'm good. I'm not trying to do any more. It looks good, but I'm not trying to do any more at the moment. It's 110, 112 pips. Not bad. Just got to watch for when this is going to cross over to the buy side, and then once it crosses over to the buy side, put in a buy order and wait for it to push up. And then of course put your stop loss. That's the other thing too. Looking where your stop loss is going to go versus where your buy entry is going to be at, and where your take profit is going to be. It's a lot more risk on the table for this particular pair. So I don't know if it's necessarily a pair you want to get into, but hey, if you're feeling froggy, if you want to jump, it might be one you can jump with. Personally, not gonna indulge in it. Not today. Yeah, this right here is a Great Britain pound, Japanese yen. Of course, it looks like it's on some downward trajectory type stuff. And these trend lines are just looking at possible entry points because we're moving down, so we're looking for entry points over to the sell side of things. Of course, it crossed it over here. It's going down. Did a little bit of a pullback, so now we're looking for next crossover. You gotta watch out for the support line, but the target is down here. So once again, it's one of those things that we'll look at, but not anxious or willing to participate in it at the moment. Great Britain pound, Canadian dollar. We just talked about this one, so we're going to go back and revisit that. And then we'll look at Great Britain pound, New Zealand dollar, which is where we're at right now at the moment, and which we already spoke about to some left. This is where we got it on this one. This is back on Friday. It's pretty aggressive. Came back to the 3.82 handle. Price has been running pretty good, going up, and it's been really sticking to the plan pretty good. You know what I'm saying? This is the low. This is a high. This is a higher low. Higher high. Higher low. All right, not by much, but higher, right? Higher high. Higher low should be. Then the next leg up should be a higher high as we advance closer to our target here. All right, so it's very important to monitor this and see how the market moves over the next 48 to 72 hours. All right, hopefully we can go ahead and knock this one out. If not today, then tomorrow. Definitely before Monday. If not, after Monday it'd be fine too. But I want to keep this in play. And remember, it's not 100% out of play until it crosses back below our A. And then if it did at that time, we hit our stop loss and be out of the market anyway. So at any rate, that's pretty much it for me. Unless you guys got any questions, I'm going to call it early today just because, you know what? Tired. Had a lot going on. And I need some more rest. I am not rested up. So it's 349. I'm trying to see what's my risk to reward ratio for this particular pair again. Okay, so I was risking 349 pips to get 374 pips. So it's almost basically a 1-to-1 type risk reward ratio. Not my finest hour, my finest moment. I think the main reason why I went into this particular trade, though, just because it's such a short pullback, and it seemed like it'd be an aggressive, quick move up to this target price here. Let's just hope I'm not wrong, and that we're able to get there and able to make some some good money off of it. Let's see here. Check a couple things real quick. All right, guys. So, well, anyway, listen, that's it for me for tonight. I am gonna get out of here early today. Like I said, I got a lot of stuff I gotta do. Some sleep I gotta catch up on. But I just want to just kind of give you an update real quick. Yeah, we made some money off those other two, and we're making money off this last one, and hopefully we got this last one closed out. Keep in mind too, at the beginning of the year, we're gonna start trading that live account. And in that live account, we're going to be doing futures, options, and maybe some options on futures contracts. It's not going to just be straight currency trading just because that account doesn't allow for it. Plus, too, I think that with these smaller accounts, the futures are a little bit better option to trade. There's a lot of risk involved, but I think that just because of the leverage amount that we're able to get with the futures over putting it into a just a straight currency account, I think it's a lot better, especially here in the States. Now, if you're overseas somewhere, then it might be different because you get a lot more leverage with the currency account over there. But a couple things over here. One, the futures trading brokers are regulated. So I know a lot of people complain about how if they feel like they put in stop losses or they do whatever, and then the account doesn't trigger the stop loss when it needs to trigger it, or it's triggered automatically, or just a whole bunch of hokey stuff that goes on in their accounts that they really can't account for. Well, when you're trading on a regulated account, those things don't tend to happen, right? So that's the other reason why I like trading on futures, is just because it's a regulated account and I don't have to worry about a whole bunch of nonsense happening. And also, too, we can look at volume. With Forex, you can't really monitor volume because there's no centralized market. Everything is all over the place. And even though there's some different types of volume indicators that's out there, it's not really actual volume per se. It's close to it. I know it looks like it and all that stuff, but with futures, you actually get the volume for the pair that you're trading. So there's a lot of things that you can see in real time with features that you can't necessarily see with the spot Forex. And then also, too, like I said, just the leverage part of it. I think the leverage is a lot better here. And then if you have to do the options on the currency pair, the good thing about the options on the currency pair, if you're one of those type of people that have problems with, let's say, I ain't gonna say direction, say like maybe timing or whatever, or really direction, right? So let's say you know that the price is going up, 50 or 75 or 100 pips or whatever. But before it makes that move up, it takes a big swing in the opposite direction, and then you want to get stopped out of the account, whether it's because of a stop loss or you just get a margin call because you didn't have enough funds in your account to account for that big dip in the market, that big market swing. But then after 4 or 5 days, it goes in your direction and it hits your price target. If that's something that seems to be happening to you on a regular basis, you might want to try options on currency pairs. And the reason why I say that is because with options, it doesn't matter. You're not going to get those margin calls, right? Because the options, the only price you're going to pay is the price that you initially put down for the right to control that currency pair for a specific time frame, right? And so really all you have to do is be right about where the pair is going to end up at, and within what time frame. So as long as it's ended up where you originally called it, within the next 30 days or so, 30 or 60 days, you don't have you make money. If it's not there, then you lose money, and if it's more than that, you still make money. So trading on options may be something that you want to look into if you're having some, issues or some difficulties with the account that you're trading out of, just that it's not being, you're having these big drawdowns in them, okay? Anyway, listen, man, thank you guys for tuning in. Hope you guys made some money on these last couple of trades. If you hadn't, don't worry about it. There's still opportunities, still time to get into some of these trades, and for you to make some money. Take care. God bless. Good night, and I will see you guys in another 24 hours. Bye.